Chapter 5, and like I said, we will take the time to go over a lot of the homework, and I'm going to mainly focus on the items that matter in this chapter. So we know, we finished talking about the balance sheet. Now we're going to start talking about the income statement. And we know that the income statement really is a picture of the earnings that a company has received, or earnings they've earned. That's not the income that has been received by I should say earned by a company, because it's not always received, over a period of time. Where the balance sheet is a snapshot, the income statement covers a period of time. Sometimes it can be a month, sometimes it's a quarter, and we do know it's usually an operating cycle or a year, whichever is longer. For our purposes, pretty much a year. So the income statement truly reports the revenues that have been generated from a company, and it also shows the expenses incurred as a result of earning those revenues. And then it also will provide other gains and losses that have transpired throughout the year. Management really deals with a real challenge when we're dealing with earnings, because the stock market can fluctuate instantly if they're off on their expected, profits by 2 cents. Look what happened just recently to the airline industry with Ebola. The airline industry just took a huge dive just because of the concerns of Ebola. Can you imagine those that need to present financial statements, and specifically the income statement, to show that the earnings projections were met, is big pressure. And I am not condoning it, but there is a lot of manipulation on financial statements, because they know what's going to happen to the stock price when their earnings are not met. So the financial statement really is the picture of how the stock prices are going to move upwards or downwards. Basically, we know with financial reporting, ultimately we're trying to provide information to users. That's the bottom goal. And the income statement provides information about the company's income. Now, we're dealing with income from operations, but we'll also talk about other types of comprehensive income that is shown on the on the income statement. Now, I will want you to know this, and I'll take my time going through this chapter.
Did you want this up on the screen or not?
Thank you. Sorry, guys.
A little easier to follow.
I thought it was on the screen. It was when I looked earlier.
I don't know.
The pick is muted. So you have the pick mute button again.
Thank you. I'll go back to what I was just talking about.
We're still on what, slide 4?
There, let me go back so you guys understand where I was at. I basically said the income statement is all about seeing the income reported during the period, along with those expenses that were incurred to make that income. We talked about the management's pressure. And here, overall, we use financial statements for information for users to make decisions. Specifically, the income statement discusses the income of a company, the operating income, and in addition to this operating income we're going to talk about, there's also some other comprehensive income that may occur with a company. They could sell certain assets. They might sell a piece of their business, a certain sector of their business, and we'll talk about the various types of items of gains and losses or other income, in addition to the reason they're in business, just to make a profit on their day-to-day operations. This sheet is the one I want you to know. What are the purposes of an income statement? Know these, guys. I'm telling you right now, some multiple choice will be on this. What's the purpose? Evaluate the profitability and assess the return on investment in the company. We'll see how well the company is performed. And there are also various types of ratios we're going to look at where we can see, based on the profitability, what the return on the investment is per share of each stock that is has been issued, how many dollars per share would that equate to with the profitability during that period. Know that. Assess the company's operating capability and financial performance for the current period and over time. So operating capability is all about what are they in business to do, and how is their performance compared to previous years and compared to other companies in the industry, or maybe an industry average. We can also look at the income statement to see how has management performed. I mean, ultimately, management guides the decisions of a company. Management is the one that controls and runs the company. And so when there's profitability, who gets the benefit? Management. When there's poor income or losses, who takes the hit? Management. An income statement predicts the company's future income and cash flows. So basically, depending on how the net income shows today, and depending again on the balance sheet and the revenues, we know there's a likely possibility that the future cash flows can be determined based on the current situation of a company. So when the company is very profitable this year, the chances of cash flows continuing in a good direction are very favorable. So why do we care about a company's future cash flows? Because without having cash to pay the bills, no company is going to survive. So it's important to have income, but it's also important to collect the income you have. Understand the components of income. As we will see in going through this chapter, one huge aspect of income is, of course, the operating income of a company. So when we're dealing with Microsoft, we're dealing with various sales of software and whatever services they provide for that. However, Microsoft has a lot more going on than just what we think of software. They've got other components or subsidiary companies. They're always buying or selling various components. They can sell assets. So we'll look and see in this chapter what other types of income is shown on the income statement. Assess the company's risk. The income statement is one little piece of assessing the company's risk. Generally, if profits are good, that's a comfort for minimizing certain risks, but there's a lot more to assessing the company's risk than just the income statement. You need to know the economic conditions of what's happening in that specific industry, along with their assets. But this is one piece. You do use the income statement to look at risk. Compare performance against other companies. I know for me, when I'm looking at a financial statement or any financial statement, it means nothing to me unless I'm comparing it with another year or years, or I'm comparing it with other companies in their industry sector. Because the numbers are so huge, it doesn't sync, and there's no relationship to those figures. So oftentimes, when we have comparative financial statements, we usually compare them against previous years within a company. But it's also really beneficial to compare them with other industry companies in the industry. So airlines, for example. I'm always interested in Delta. My former husband worked for Northwest, and So that's just been a part of my life for years and years. And then they've merged, and they've grown to be a pretty large company. But I do enjoy being able to look at their financials and compare them with the American Airlines, United. You know, it just helps give me a better understanding of how they fit in the big scheme of the industry. Then assess the impact of economic factors on the company. So don't really know what they're trying to say there, but again, the economic factors on the company, you need all the financial statements in order to really assess how the economy is affecting their business, but the income statement clearly shows the earning component of the company. Definitely make sure you guys know the reasons of how it benefits users to look at that income statement. Next, the question is, what is income? Basically, the concept called capital maintenance concept, which I want you to know, is really stating if over a certain period of time, how much money is really going to go to the shareholders if everything was said and done. In one period of time, the net income is the amount it usually doesn't, but it could distribute to the shareholders without depleting the other capital in the company. Now, when we're dealing with dividends, does a company usually distribute all of its net income? They can't, because they need it to continue operations and to expand and to grow. But technically, the net income could all be distributed to the shareholders. So that the capital maintenance concept states, know this, that the net income over a period of time is the amount that could be distributed to shareholders without depleting its other capital. Here's an example. Layla Company had net assets of $45,000 at the beginning and $80,000 at the end of the year. Shareholders made additional capital investments of $10,000 during the year. And Layla distributed cash dividends of $2,500 to shareholders during the year. So we can see by this example, we ended with $80,000 in assets. We started with $45,000 in assets. So the difference is $35,000, that change in assets from the beginning of the period to the end of the period. It went up $35,000. An extra $10,000 was distributed in stock, which basically shows that we receive cash as a result of that stock. Do you understand what I'm saying? So the excess $35,000 and change of net assets, $10,000 of that cash was due to, or whatever the asset, but cash was due to selling more stock. And $2,500 was distributed in dividends, which is a reduction of cash. That's why in this scenario, we add it back in. So what they're showing us here is, based on knowing the assets, beginning balance, ending balance, increased stock, and dividends, we can determine what the income was for the year. Okay? Because again, we're not just dealing with cash, accounts receivable. I mean, the assets change during the period, and then we take into account any changes in ownership, increase in stock, or selling stock, plus any dividends distributed, help us see what the income is for the period of time. Comprehensive income, so that was dealing with capital maintenance concept. Comprehensive income is the change in equity of a company